Good afternoon, everyone here in person and virtually. My name is Mike Weiss, Product Manager with Nasdaq, responsible for data and access and analytics for North American markets. Today we're going to talk about a little bit about our journey into the modern data stack, some of the decisions we made, some of the lessons we've learned along the way, some of the team structures we started to put in place, and some of the results we've seen so far. If you wandered in here and you see me dressed up like this, I'm sorry now, I did not get the casual dress memo, so I apologize in advance. I'm also sorry for the muddled slide. That is my fault for not fixing before. So, I wouldn't be a product manager if I didn't have a roadmap. It's a habit, sorry. We're going to start our journey discussing a bit about who Nasdaq is. From there, we'll discuss our own path into the cloud and specifically our partnership with AWS. Finally, we'll land on issues we were trying to solve, our final approach, and results so far. So let's get started. First, before I begin, show of hands, how many people actually know who Nasdaq is? Okay, good part. How many people only know Nasdaq as a number they see in the news and they should be happy about if it's going up or down? Fair enough. That seems about right. So, who really is Nasdaq? It may surprise most of you just how globally we actually are. Nasdaq operates over 30 exchanges across a variety of asset classes in both North America and the Nordics. Not only do we operate those markets, we are also home to over 4,100 publicly listed companies globally. Another interesting stat, we actually have 73% of all the tech listings within the US, including the top 4 market cap. It is this relationship with those tech companies that keeps Nasdaq in sync, not only with tech trends in the financial sector, but just generally abroad. Outside of our own markets, how many people know that Nasdaq actually sells market technology to over 130 markets worldwide? We have a couple. We also sell to 2,200 additional financial institutions across the globe as well. To say Nasdaq is the global engine of the financial markets is not hyperbole. So it's if you were to ask someone and say, how long has Nasdaq been in the cloud, you might be surprised we've been there since 2012. Back then, we actually had a relatively simple idea. There's a regulatory compliance law called 17A4, which is essentially a storage compliance for all regulated markets. So cloud was relatively new. We decided to take a risk, build a small product, and see what we can do on it. That product didn't really work out. A lot of the financial community did not want to jump into the cloud, but it was a lot of good lessons learned. That quickly made us launch the next service, though. In 2013, we actually launched our billing platform on Amazon, leveraging a service then that you might know as Redshift today. Back then, it was actually called Project Cookie Monster when we first started looking at it. We quickly realized how powerful cloud compute was and how powerful these MPPs could be in the cloud, and we actually launched our Nasdaq Data Warehouse in 2014. From there, we kept quickly iterating, launching new surrounding systems into the cloud, not all data, some other systems. And only last year, Adina Friedman, our CEO, at re:Invent announced a 10-year partnership with AWS that's going to take our marketplaces to the cloud. This will revolutionize the financial market. So, like I said, we launched our data warehouse in 2014, and it went well. Things were going okay. We were moving along. In 2016, we ended up launching 7 new marketplaces in the US. At the beginning, everything was going fine. 2017 into 2018, things started getting a little dicey. Volumes were going up. It was much more difficult to load data into Redshift, and we had to make a change. It was at this time we actually decided to shift from data warehouse to a data lake. Show of hands, how many people run a data warehouse today? Okay. How many run a data lake? Okay. How many run both? Okay, good. So it's not that uncommon. So we got this done in 2019, which was just in the nick of time. Well, let's talk about this first. When we shifted to a data lake, we still needed to have query points, right? So what we ended up actually doing was leveraging Redshift Spectrum at the time. For those who are familiar, Redshift Spectrum was a new Amazon service back around 2018, 2019 that lets you query data that was external to Redshift. This is what essentially allowed us to operate our lake. At the time of the transition, we moved from 70 Redshift nodes, increasing about 4 every month, it felt like. And I think at the time it had a cap of 120, so quickly we were approaching that. to be able to operate the entire data infrastructure with less than 20 nodes across a couple different clusters. So to say it saved money is an understatement. Where I was going, we got this done just in the nick of time, because at the end of 2019, volume was relatively stable. We were operating at roughly 25 to 35 billion transactions a day through the warehouse / lake. 2020 comes, start of the pandemic hits. We had a bit of another issue on our hand besides the global pandemic. Volumes decided to increase. We went from averaging 25 to 35 billion on today to anywhere between 100 to 125 billion per day on average. And we high watermarked just this past May at 220 billion records. So to say we dodged a bullet by transitioning is an understatement. But this also did expose some other issues. While we had modernized our lake and our warehouse and we had all these great cost savings in the query layer, we hadn't done anything with the analytics or the ETL or the visualizations of the reports. So you might be sitting there thinking, what were we missing? Like I said, the volume had increased, but trading system data is actually really complex. It is optimized for performance, not for querying or analytics, as most message data is, right? It's not the optimal setup for people to query. So we had to find a way to make that more efficient. As I said, we were still running legacy ETL tools. How many people in this room have ran a traditional ETL, whether it be Informatica, Pentaho, Talon, show of hands, Jasper, any number of them? There's tons of them out there. Yeah, it was pretty common, right? Pre-cloud, those were the tools of choice, and we were no different. But those tools were inefficient for the volumes we were starting to see. And in addition to that, we were also seeing a trend that our business users also wanted to participate in the transformation of our data logic, of our data, which Pentaho wasn't really helping us do. So we ended up having a lot of SQL scripts running around for various things. Another thing, we are very much a creature of T+1 reporting, right? Data loads, we send a report. Data loads, we send a report. And we've done that for years. We didn't have another solution in place at the time, and clients are becoming increasingly more likely to ask for dynamic access data, whether it be APIs or visuals. So we needed a tool that could also help us solve that. In addition, because we had left ourselves in this state, we had other teams start creating their own data stacks, right? You know, you have to get stuff done. We can't sit around and wait for the reporting team to add a column to a report, get insights into making a pricing change, see what's actually happening in my markets. Am I losing money? Am I gaining money? All of that stuff, right? So teams started creating their own data stacks. As I pointed out, because our central team was busy, in a relatively small part of the organization from a number of people-wise, we ended up having 4 different data stacks. We had our economic research team, which you can think of as like our data science / narration team. They're the guys and the girls you go to really understand macroeconomic impacts on your market, right? So they were using R, Spark, SQL. They have SQL scripts that are thousands of lines long, as I'm sure all of us have seen in our career. You had our ingest team also bring in Spark and have their own SQL scripts. The reporting team, as I pointed out, was running Pentaho and SQL. And then my team showed up in 2020. I brought in dbt, and we decided to take Quicksite as our visualization tool. We could talk about that in a minute. So we had 4 different approaches. If you're a business user, who are you asking to get your data from? We had the business team actually put tickets into all 4 systems to see who can get it done first. So they made it a race. It was a game. Sometimes we put bets on it, sometimes not. You know, it was fun. Besides that, 2 teams might actually implement it, so you might get redundant work. But even more frustrating is those 2 teams might get different answers. Who was right? So it created a lot of frictions in our environment. So this is where we ended up with our current data stack. There's a couple things I want to call out here. One, you'll notice I don't call this a modern data stack. You might ask why. When you're trying to sell a strategy in a data vision, it's important you get buy-in from everyone, not just the executives, not just the people paying the bills, and not just necessarily the end business users, but everyone, including engineers. Interestingly enough, when I started this journey back at the end of 2020 trying to pick new tools, I used the term modern data stack. And one of my senior engineers who I had a career with came over to me and said, don't use the word modern. I asked him why. He's like, everything's modern at one point in his career. These won't be modern in 5 years. He was right. So we just call it the new data stack. You also notice we don't use a third-party ingest service. We actually wrote our own. Because we were in the cloud so early, a lot of the services that are available today were not available back then. Besides that, trading systems are a little bit quirky when it comes to data production, so we have a lot of customization around how we have to grab that data to load into our data lake. We'll talk about DBT more, why we went that route in a minute, but I also want to point out the two other vendors we have currently picked. We recently signed our contract with Atlan, so we're excited to really start our integration with them over the next month. Raise of hands, how many who have a data lake think it's more of a data swamp? No, just us? Okay. Yeah, it happens, right? Data goes in, never quite sure what's in there. You might find something good, you might find something bad, but it is what it is. We also are excited to announce that we are partnering with Monte Carlo to bring in data observability and monitoring, so we can guarantee our data quality, not only our internal customers, but our external customers. This architecture is not complete. It's still missing an orchestration layer, more than likely. Maybe a reverse ETL engine at some point. Who knows? Our work on this is never done. We're always going to constantly evaluate and make sure we're bringing in the right tools for the right job. But importantly, when we sold the vision to our management and to the team, we wanted to make sure we were taking a very agile approach and bringing in pieces at a time and showing success pieces at a time, which has been the reason primarily I think we've gotten so much success internally from our business users participating. The last tool I'll talk about is Quicksite. As I said, we did the partnership with AWS. As we were evaluating BI tools, Quicksite is relatively simple to set up. Our users love it. We went from having set it up in a week to having 40 users in 2 weeks, so it kind of went off the tracks, and there it is. Users seem to like it. They're getting good insights out of it, but all that's still powered by our DBT models. So, as we were going through this, it's not just about the tools, but it's about the people you were picking tools for. It's easy to pick tools for engineers. It's easy to pick tools for data scientists. It's hard to pick tools for salespeople and executives. They can be very finicky about what they want to do. You're not quite sure what skills they have, but you have to keep them in mind. While I was putting this slide together, I actually read an article from Bar Moses, the CEO of Monte Carlo. And the question she raised was self-service the biggest lie in data? It's an interesting thought, right? Maybe your executive doesn't have SQL skills and can't actually self-service everything, right? They're limited to what you put into a dashboard or into an analytics cube or whatever's out there for them. So what does self-service mean? To me, self-service is not just necessarily about the capability of someone to get access to data, but how quickly you can give them the answer to something that they don't have the answer to today. Right, so part of what we're looking to do is shorten the flywheel and turnaround time for the business to actually get the answers they want, even if it's not in the tool set today. So let's talk a minute about why DBT. How many people in here have wanted to actually actively kill SQL over the years? Anyone? Am I the only one? Okay, good. I'm not alone. Candidly, for the better part of my career, I wanted to mitigate the amount of SQL we ever had in our environments. It's a weird thing for someone in data to say, but SQL scripts become monoliths. They're hard to maintain, and the person who normally maintains it leaves, and then no one has any idea what was in there, and you end up rewriting it anyway. Well, the good news is that DBT helps us fix that. I was very skeptical of that at first, but I'm happy that it actually worked. So, now that we had a tool made DBT more software-like, the other thing that attracted us to DBT was actually the community. It might surprise most, but we actually look for active communities when we're picking tools, particularly ones that are open source, right? We want communities that are actually participating not only in the core product, but launching new packages and services on top of it. Go look at the DBT hub for all the packages out there. It's incredible. And then all the materializations and all the additional plugins that DBT didn't build themselves. It is actually a testament to everyone in this room and online how great the community is. I was astonished by it. So you have those two parts of it. And then the third part of this was DBT actually has a great enterprise offering in their cloud solution. One of the things I was worried about when bringing the tool on this was how were analysts going to set up their development environments? I didn't want to have to sit there and help them install as we brought in new analysts. DBT Cloud made that possible by just having an environment set up for them. It also reduced the amount of Git they really had to know so that they didn't have to worry about running into Git merge conflicts as often. And for anyone who's had them, even the most senior person can get into trouble with some of that stuff. So great. We buy DBT. Everything's wonderful, right? We know what we're doing. I've used it for 5 minutes. I've greenlit it. We're hiring analytics engineers. We're off and running. Not so fast. We had a problem. We had to figure out how to set this thing up. What were the best practices? The documentation is great, but I don't know, a little help goes a long way. That's where DBT Pro Services came in. They helped us bootstrap the project from day one, help us lay out good practices, and help really get our options business, which was the first business we got online, moving quickly. Besides the initial setup, DBT has come in several other times to help us with some of the more challenging questions, particularly around models that need to scale. Most recently, we had a model that on average does 15 to 20 billion messages per day, and we were having some performance issues, right? DBT came in and actually helped us solve that problem. So we had a model that would take 45 minutes to an hour to run in a day, and they got it down to 10 minutes. So not always following the best practices of DBT community, but it works. So we'll take it. Obviously, as a financial company, as most companies at this point, security is of the utmost importance, right? So how are we going to connect DBT Cloud, which is a SaaS offering, to our proprietary data in our own AWS account? Our InfoSec team had doubts that this was actually going to work. First thing, DBT offers single tenant as a hosting solution, which our InfoSec was all about. So then the question is, well, how are we going to connect? VPC peering was the obvious choice, right? That's what most people would do if you want to not have your data go over the internet. But Nasdaq, or AWS had an alternative choice in Private Link. What Private Link lets you do, for those who doesn't know, is only expose a single resource to another account, so they can only touch that one. So in other words, even though DBT is talking to my AWS account, it only sees Redshift at this point. It doesn't have access to any other services, even with the IAM policies. This is what laid the groundwork for both Monte Carlo and for Atlan. Even though we're multi-tenant for both of them, the Private Link is still our main connections. Well, Atlan's single tenant, Monte Carlo is multi-tenant, but we're still using the Private Link setup to connect to them as well. So tools are great. Culture, teams, and process are more important, though. If we had picked new tools, gave them to the central team, and said that was it, yeah, we'd probably get more efficiencies, some for a short time. Would it get us where we want to? Probably not. We'd still have a single team responsible for all the exchanges in the US and Canada, trying to solve every data problem that pops up. So we didn't want to just rethink the data tools that we were using, we wanted to rethink the team dynamics. Early on, we did debate the central team, just building a new central team and saying, maybe that'll solve it. Maybe the central team is the issue. That's never the right answer, by the way. So we quickly pivoted from that. Then we decided, well, what about fully decentralized? What if we just give every business unit their own analytics engineers or data engineers or whatever they need and call it a day? Well, that might work for a short time, but you'd probably end up back into the disjointed environment at some point, right? So we ended up on a hybrid approach in which each business unit would still get their own set of data resources. We'd have a platform team responsible for the tools and integration and continue to add new tools to the platform. Economic research, who plays that central data role today, would still be the narrators, but we take off some of their janitorial data work, them concentrate on the higher value add type of data asks they're meant to do. And we would also have another central team that would be there as a backup to the teams that were embedded in the business units. They would be there to help onboard new business units, but also be there if there was bigger projects, initiatives, or problems, and could also help keep an eye on best practices, make sure we were delivering things on time, and so forth. Out of curiosity, how many people in this room run a decentralized team? Okay. How many run a centralized? Okay. Anyone run hybrid? All right, again, I'm not alone. I feel better. So as I said, it was important that we came up not only with the team structure, but how we were going to onboard different business units, right? We wanted to start small, deliver fast, and show value immediately. So it was important that we had a way for the central team to partner with a business unit and get them off the ground quickly. So the way we would do it is the central team would partner with the analytics engineers that we had just hired on the business unit, come up with a baseline set of requirements, work through them for a given amount of development cycles, and we didn't set a time limit, we'd set a metrics limit. So if you needed 4 models or 3 dashboards or whatever the business unit decided was their baseline starting, we would be there to help them through that initial process. Once those were met, we'd evaluate, make sure there was no additional metrics needed or models needed, and then transition it into the hands of the analytics engineers themselves. From there, the analytics engineers, the business analysts, executives, and sales team of that business unit were able to sustain themselves moving forward. They could make changes quickly, rapidly, answer questions, really at the touch of a finger. So, what have we really accomplished so far? Our options business, which is our most competitive business, is fully onboarded. They have several hundred different models that lead into a couple key models that they really look at. They're looking at subsegments of the business they didn't have insights into before. Our sales and executive team, because of these DBT models, can now get access to data points they never had access to before. Before, they'd have to put a request into the economic research team or the data team or put their finger in the wind and hope some other team would actually answer a question for them, and it might take months for them to get an answer, and by that time, it might not even be relevant. You might have missed an opportunity for new business. You might have lost revenue because you didn't make a change quick enough, right? Data velocity is important. We also are recently starting to onboard our equities team. We actually hired our first analytics engineer on that team. He's here today. Say hi, Tyler. Welcome aboard. And our economic research team, which has their own backlog of scripts and models, are now currently moving them into DBT so that others can benefit from them in their own DBT models. As I said, what has this really unlocked? Sales and executives can now get answers to questions they couldn't before. For example, exchanges do pricing changes on a relatively monthly basis in the US. Has impact on all types of different metrics you care about. Your revenue, your volume, who's trading with who, things like that. Typically, in the old world, if they were lucky, it would be in a report somewhere, or several reports, and maybe they could piece that answer together. 9 times out of 10, that was not true. If they were lucky, there would be a free resource in the reporting team who can maybe get the answer for them, or maybe economic research. In today's world, because we have built a robust set of models and metrics, they could actually do them themselves. So in October, we made a change to what we call our QCC segment in the ISE options market. And if anyone's interested in what QCC is, I'll be more than happy to talk about that after the presentation. So the obvious question is, what impact did that have on trading volume in that segment? Because we had set up such a robust model, they were able to get the answer in a minute. And as you can see, right, if you look at the percent of total daily volume, it increased in this case. So it had the desired effect. Previously, they might not know that until mid-month, maybe the end of the month, maybe 3 months from now. Maybe they would never know. This is the power that he has unlocked. This is the power that a change in culture has unlocked. So what's next? Well, we're going to continue to onboard equities. We're doing some great work with Tyler right now and starting our requirements gathering and really getting some models up and running. We want to get DBT a little bit more integrated into our environment. As I said, we have our own infrastructure around asynchronous messaging that lets other systems run when data is loaded. We want to get DBT jobs tied into that so we can notify downstream systems that data is ready for them to use. We want to get Atlin integrated into our tools, including getting lineage from ingestion all the way to the final model. And then we want to get Monte Carlo up and running so we can get better insights into our data and what's breaking and what's not working. Because today we're a little bit too reactive to data pipeline breaks. And this is not the end. We're also looking at how we could expand this offering to our digital assets team who just came on board. And we're also looking at how we extend this to the Nordic markets as well. Thank you all for coming. How much time do we have? We have 4 minutes. If you have questions, feel free to ask in the chat room. Because we have 4 minutes, I will open the floor to any questions for anyone in person as well. Thank you otherwise. Comments, concerns? What was that? So we did a skills assessment on all our business units and picked the one that was most mature in terms of their adoption of data already. Right, so they were the ones that were positioned with SQL skills already in-house and could quickly pivot into that new model.
So you got Tyler on equities. How big is your team on options? And then,
right now it's 2 on options. The central team is 5 report developers that were transitioning into more analytical engineer support models. I think we just hired another analytics engineer actually on the reporting team that starts the end of the month as well. So. And then my team, which was the old team, now is the product team, we're 3 people who could also are still helping to support and transition teams as well.
What are you guys thinking? You mentioned workflow test. You mentioned workflow orchestrators. So what are you guys thinking? There's a lot of options to go with, right?
Yeah, for sure. So we've built our own, obviously. For the ingestion service, we have what's called, we belovedly called the Woofy. Workflow engine, real original name. It's all in Java, not necessarily friendly to a lot of analytics engineers because they're primarily Python users. So, you know, we're looking at Airflow, Prefect, Dagster, the big 3 we're looking at. We haven't made a decision yet. Anyone else?
Can you talk a little bit about the pluses and minuses of the hybrid model that you run? Can you repeat the question, Mike?
Yeah, I can repeat it. He asked what are the positive and minuses of the hybrid model we're implementing so far. Positives from the business units is they're getting better turnaround time, and that could have probably happened with a decentralized team approach, obviously. You know, we're still able to deliver with quality. We've put guardrails in place from the platform perspective to protect our models, but also our central team can look at and approve pull requests and make sure we're following best practices. Minuses, it can still be a little bit slow because we're still trying to get our footing around like how long and what we're looking for in pull requests. So sometimes we're holding up data changes that need to be deployed that probably should be approved quicker. Also trying to figure out negative, we're still trying to balance out how many people we need on each team, right? So how many does options read and how many does equities, how many do we really need on the central team in the long run? So from a negative perspective, I think getting that balance right is going to be challenging over time. Yeah, that's a good question. We're lucky in the sense that a lot of our teams are actually just separate whole business units anyway, so there's not necessarily a lot of overlap in what they're doing anyway. It is a problem in some of the more common models when you talk about like membership modeling and things like that they do share. You know, so far we haven't run into issues. Basically what we're looking at right now is really the PRs and making sure that we're checking that stuff. But one of the things that we started talking with Atlan about is how can we actually monitor some of those models as they're deployed a bit more holistically in terms of documentation, usage, things like that, right? I think at the end of the day, most of it's going to be vigilance of the team, keeping an eye on it. We do have, well, we're rescheduling, we had it, but we have a weekly kind of like guild meeting. We're trying to talk about common problems that we have, right? Because I think communication is somewhat important. So we're trying to keep that in place so at least if there is, you know, a question we can answer pretty quickly. We're still, I wouldn't say we're perfect. We're still relatively new into this part of it, but you know, those are the mechanisms we have in place right now. Anyone else? If not, thank you. Like I said, I'll be in the Slack channel. Tyler's already in there if you have asked a question for anyone online if we're still broadcasting. And I will jump in there for the next hour or two and answer any questions. Thank you, everyone.